Good morning, ladies and gentlemen. My name is Dereck Blair. I'm president and founder of Caprock Financial Group, and this is Caprock Wealth and Wellness, the Caprock blueprint to a richer, more balanced life. If you want to reach out to us, our phone number is 806-749-7870. My email is Dereck, D-E-R-E-C-K, at caprockfinancialgroup.com. And I want to thank you all for joining us this morning. It looks like it's going to be a beautiful day, 85 degrees today. We got a tech game this afternoon at Arizona State. And that is going to be a tough game. Arizona State's a pretty good team. They're going to be bringing everything to the house. I think they've had this on their calendar for a while. I do want to thank everybody that came out last week to the Tech Tailgate. We had a client appreciation event, and it was a team effort. I joined up with Dee Dee Schmicker of Keller Williams Real Estate, and I think at one point during our tailgate, we had about 225 people there. It was a big crowd. And man, if you've never been out there, Tech does such a great job at the Raider Alley with their concerts, with their food, their drink. It was just a great environment. So much fun. You had people of all ages. You had kids playing football. You had college kids. You had families. You had older people. You had Tech alumni. They just do a great job. So I want to applaud Tech for that. And if you're like me, man, this is a great year to be a Tech fan. Just loving the sports, loving the environment, the direction it's going, the recruits. I just saw we got another one coming in who's a 4-star. Just so much fun right now to be a Tech fan. So I hope everybody has a great day. Looking for the big win today. So today's show is going to be interesting. I want to talk about my week and one of the organizations I'm with and how this serves me and how this helps my clients. And the organization I'm with is called NAIFA, National Association of Insurance and Financial Advisors. And it is a national organization that, number one, it's national, but number two, it's also on the state level. And on the state level, I'm on the board of directors here in Texas. And as an independent advisor like myself, it's real important that I'm able to work with companies, work with organizations that I can learn from. I'm a big believer that if you stop learning, you get behind. You just get left behind. The world's always changing, especially in my industry, because there's just so much going on. It's always changing. And one of the things I truly believe is the two biggest risks in retirement are legislation and taxes. And the reason I believe that is because it's written in pencil. It's changing every 2 to 4 years, depending on who's running for the House, Congress, the presidency. It's always changing. Just for example, the big, beautiful bill, they say, well, it's permanent. It's not permanent. It's permanent for 4 years as long as Trump's in office. But after 4 years, it can be changed because whoever comes in, then they can kind of make their own laws. And if they have to get passed, I understand that, but they're always changing. And so the reason that's important to me is because we have people living longer than ever before. You know, I'm a big proponent on being healthy, on taking care of yourself, and I want you to live as long as you can. And there's some of you out there, and I have some clients that are going to live 30 to 35 years in retirement. Almost, you're living longer in retirement than you did while you were working. And that's awesome. That's wonderful. But the importance is you got to know how your money's working for you. And so going back to NAIFA, that's what this provides me. So this past Monday, I flew up to Washington, D.C. We had a leadership summit. It's a NAIFA leadership. And on Tuesday, you have a big dinner. Monday night, you get to see everybody, all your old friends. But then Tuesday is a leadership day. And I think I was in 7 different classes where we're discussing what's going on in Congress, what's going on with our advocacy, and what are the changes coming up? How can we be more beneficial to our clients? How can we be more beneficial to our public? And you have about 8 hours of that, of learning from other people, learning from congressmen of what's going on, what are the rules, what can we help with? And it is such a neat environment. I've been through NAIFA, I've been to Congress in Washington 3 times, and I've been to the Texas Hill twice. And every time I go, I learn something new. It's so interesting. And so what we go do is we talk about laws that either they're trying to pass, they want to pass, and we're giving our position. So basically, we kind of become a lobbyist of what we feel is important to our consumers. First time I did this several years ago, I was with a company called Allianz. I still use Allianz. It's one of my favorite companies, great company. We went to Congress to talk about putting income, what the income might be on 401k statements. Because what we felt was that people see, well, I have this big balance, but when we look at this balance, if I start taking a percentage of it out in a paycheck every month, what is that amount going to be and how long is that going to last me? So it was more of an education. It was more to educate our clients, to help them. So, every year is different. What we want to go talk about. This past year, we talked about some things with the big, beautiful bill of how we felt like that could help us and how it help our clients. And it's just a great service. It's something I'm involved with. I'm going to be involved with it because they're a big fan of advocacy. Their mission statement is empowering financial professionals and consumers through world-class advocacy and education. And their education side is awesome. They've done a really, really good job. And it's just a fun organization I get to be involved with it. I get to meet with advisors across the U.S. I get to meet with agents. And it's not just financial professionals. They could be Medicare agents. They could be disability agents. They can be, State Farm, New York Life, Mass Mutual. There's a lot of different organizations that are there that are represented that I'm able to learn from. Never am I going to think that I've gained all the knowledge that I can and I'm done learning, because every day it's changing. And so it's a lot of fun for us. One of the things that they are part of, what they have done is they've gotten smarter. So they've joined forces with Society of Financial Service Professionals, and they've also joined up with another company called Life Happens. Life Happens is a really neat organization. It's a nonprofit that talks about the need for life insurance. And honestly, when you hear Life Happens, it's humbling, because their goal is to talk about how life insurance is needed and what it's being used for. They got a deal. I saw a thing this morning that says 102 million American adults are in need of life insurance or more of it. Why is this important? I think sometimes as a financial professional, I get caught up in using life insurance as a investment vehicle, as a retirement vehicle, because it's tax-free income. And I wholeheartedly, I believe in it. That's my retirement. I 100% believe in it. But sometimes I forget about the term products that maybe can help individuals, can help couples, help families, that they receive a death benefit. So one of the stories they had talked about was a firefighter from up north. He was Iowa. He was 43 years old, had 2 kids, beautiful family. And like any other day, he goes to work. He goes into the fire station. Everything's normal. He goes to bed. The gentleman never wakes up. And so they're interviewing this wife, and she's talking about just the impact of losing her husband, losing her best friend, the love of her life, and what this did to her. But him having life insurance for her, giving her the death benefit, she was able to continue her life with her boys. She was able to raise them the way she wanted to. And I think sometimes I forget that. And I'm just being honest with y'all, that sometimes I forget how important life insurance is on a surviving spouse. I've lost 3 clients in the last 2 years. They've all been men. They've all been older men. And so we did have a financial plan in place. But for the younger generation, these young guys, these young women that are starting families, that might have 1 or 2 kids, you're getting started, you're just trying to survive, I think term definitely needs to be something you might look at. I am an independent. I carry a lot of term life insurance. I have a lot of different companies I can use. And just to be honest with you, I'd love to work with you, but you don't have to work with me. Go work with somebody. If you're a young person, if you're a grandparent, you have a child or a grandchild that's starting that family, talk to them about getting some life insurance. Because what we saw this weekend was through the Life Happens of, if you don't have that in place, if you have a husband and something happens, bad things happen to good people. I hate saying that, but that's the truth, is bad things happen to good people. What is going to happen to that surviving spouse? Are they going to be okay? A lot of the times they're not. We heard stories that people would have to move back in with their parents. They'd have to move in with the relative. That it not only are you losing your spouse, but the financial hardship too. So I think that's something that I'm really going to be more cognizant of. is the term side, because life happens is so important. We want to make sure that people are going to be okay financially. They're going to be able to keep on living. When we build a financial plan, we always take into account revenue replacer, as far as if one of our clients gets sick, is that surviving spouse, do they have money to take care of them? Do they have, if they pass away, do they have money to keep going and live that lifestyle they want to live? But after this week, it was very eye-opening that it's more important than ever that these young people, and by young, you could be 20s, 30s, 40s, 50s, do you have something in place? And so I got to analyzing myself and looking at my plan, and I do. I have a term policy. Crew is 13 years old now. I got it when he was born, so I have about 8 more years on it. And it's a policy that I pay a minimal amount to every month for a large tax-free death benefit that would go to my wife. That the truth is, I hope I'm wasting these premiums. I'm paying premiums that are going to go to nothing, because if something happens to me, my wife is going to receive that death benefit, but that means something has to happen. And so in the back of my mind, I know that I'm hopefully throwing this money away, that my wife will never collect on this. And I think that's the way we kind of have to look at it, is to know that, hey, this is a leverage or a hedge. This is a hedge bet I'm making that my wife or my spouse will never need this, but if they do, it's going to be okay. So all I'm saying is I want to advocate for look into a term. If you're a young person, if you're a middle-aged person, and you don't have life insurance, you don't know what's going to happen to your surviving spouse, man, give it a thought, take a look into it, get an idea of what out there. It's super inexpensive. Of course, the younger you are, the better rate you get. And one of the things about NAFA too was you're sent with people of all walks in this business. I'm sent with disability people. I'm sent with long-term care people, State Farm, New York Life, Mass Mutual. There's just a lot of great companies out there, and you're learning from these other people. And so just an awesome opportunity for me to get to be around these titans of the industry. You're the president of NAFA, Doug Massey, has become a really good friend. He's from down in San Angelo, and just an awesome person to be around. And when he speaks, man, I just soak that information in, because he's been in NAFA so long, I believe about 25 years, that he's seen the good, the bad, the uglies. And when he talks, it's just really good information. And I love to be around these older gentlemen that have been in the industry, how they've seen it change, the goods, the bads. And it's just an awesome opportunity for me to learn. And so that's kind of how I work. We're headed down to San Antonio next, I believe it's in February, for the NAFA Texas meeting. We're not going to the Hill this year, but we will be going to a NAFA Texas. They have some great speakers come in. And then come March, we're back on the Hill in Washington, D.C. And so one of the things that I was nominated for that I'm real excited about, I am on the board of Texas, but one of the things I'm excited about, I got voted in for co-chair of government relations and advocacy. So as the policies come out, I'm going to be a lot more involved in the policies that the Texas government's putting out, and how that's going to affect our clients and how that's going to affect our consumers, because that's what NAFA does, is we're fighting for our clients. We're fighting for the consumers of really what is going to be best for them. And so being a NAFA member is ethical standards of what is best for our clients, what is best for the consumer, because y'all know as well as I do, somebody has to look out for you. And that's where we want to be, and that's what NAFA does. So it's super exciting. So we're going to take a quick break. I'm going to come back in with just a second. We got some more information to talk about. Thank you for joining us this morning. Give me a couple minutes and I'll be right back. Okay, we're back. Again, this is Dereck Blair, president and founder of Caprock Financial Group, and this is Caprock Wealth and Wellness, the blueprint to a richer, more balanced life. If you have any questions about what we've talked about so far, don't hesitate to reach out to us, 806-749-7870. And the second part of the show, I want to talk about some emails I've been getting, a lot of questions about annuities. I've had quite a few people reach out about wanting to know how their annuity works. And it's really surprising, the people that have reached out, bringing me statements saying, I have this annuity, I really don't know what it's doing. And so I kind of want to discuss the different types of annuities, maybe how they work, what they're supposed to do, because it can be very confusing. If you go online and you look at annuities, there's a ton of pros, there's a ton of cons. And that's the truth about it, because an annuity, I believe in annuities. 100% I believe in annuities, because I really believe in the right situation, annuity can be a great vehicle. But at the same time, if it's used in the wrong way, it can be really detrimental to someone's financial future. And so I just want to kind of do a deep dive into the different types of annuities and how they work. So you basically have 4 types of annuities. Number 1 is an immediate annuity. So an immediate annuity is, I'm going to give a life insurance company a set amount of money. Let's use round number of $100,000. So I'm going to give this company ABC $100,000, and I want to start taking an immediate income for a certain period. Now, that could be a 10-year period, a 20-year period, a lifetime period. And depending on how long you take that for, that's what your payout is going to be. So sometimes these might be used to supplement income. They might be used for a brief period that you need to bridge a gap. It could be a variety of a reason, but an immediate annuity is that I'm going to give a company a certain amount of money, and then I'm getting a payment for a set time period. Don't use those a lot. I find there's other vehicles and other ways we can do that. So it's a little bit more better, but that's one of the options. A second type of annuity is a fixed annuity. A fixed annuity is just like it sounds. It's basically like a CD, is that you're going to give a insurance company a certain amount of money, and they're going to give you a fixed interest rate. Now, annuities are very interest rate sensitive. So depending on what's going on in the outside world with the interest rates, that's what kind of rate you're going to receive. So, for example, I think right now we have some annuities, fixed annuities that might be anywhere from 5 to 7%. Now, those can be for a certain amount of time period. Those might be a 6-month, a year, a 2-year, a 3-year. And of course, probably the longer you go, the better that interest rate's going to be. But that is going to be for the more conservative investor. And that is why it's so important that you know how your money's being invested. It's so important that you know, what is my risk profile. We have people, it's funny because on the same day, I could have a person who is so risky, so aggressive. I want to roll the dice. I want to go for it all. And then that next person that comes in the office does not want to lose a dime. I've worked hard for this. I went through 2008. I went through 2020 when the COVID hit. I do not want to lose any value, and they're super conservative. So there's no right or wrong answer on how you're investing, but you have to make sure that it matches up to your profile. You have to know how that money's being invested. And that's why it's so important that you do that risk profile once a year to know, what are your thoughts on the economy? How does this money need to be invested, and what's best for me? So 2 types so far: an immediate annuity and a fixed annuity. The third type of annuity is a variable annuity. Variable annuities, and I have to be real careful how I talk about this, because me personally, I've never sold a variable annuity, and I don't see myself ever selling one. It is a higher charged product in a brokerage house. It's basically a mutual fund wrapped with a life insurance. And so you have to be real careful when using one of these of what that return might be, because you are exposed to the markets of the ups and downs. Now, on a variable annuity, you can put riders on there. There's all kinds of different riders that you can add on there that give you some guarantees, that give you some income, that give you some payouts. But you have to know what these fees are, and you have to know what you're paying for. So it's very important that when you're working with an advisor, you know how this is built. Now, the crazy thing is, so for example, Allianz is one of my favorite companies. I use them quite a bit. Allianz in itself, I think they have 6 different types of annuities. Well, if I'm using 10 different companies and I have contracts with 10 different companies and they all have 6 different types of annuities, that is 60 annuities right there that I'm able to choose from for my clients. And every one of those annuities is built different. They have different goals. They have different ends. And you have to know what those are. So inside of Allianz, for example, they do have the fixed annuities. They do have lifetime income annuities. They have annuities that have increasing payout. They have annuities that have long-term care built into the payout. So you have to know as a consumer, what kind of annuity do I have? And when is the last time I had a review of this annuity? When is the last time I looked at what the options are? Annuities are so interest rate sensitive, they can change on a dime. And so, for example, I work with a lot of, there's a company, it's Atmos. I work with a lot of Atmos clients. I've been very blessed, very privileged to work with those guys and girls, just a great group of people. But in a 1 month span, I had 2 different Atmos employees that were retiring. We look at their lump sum pensions. One of them, I could improve on the pension payout. I was able to beat it. On the second one, her pension was going to be higher. And so the numbers don't lie about what that payout's going to be. Now, is it interest rate driven? Sometimes, but also it is, how am I going to take the payout? Am I married? Am I single? Do I want there to do, is it important that I have long-term care attached to this? There are so many different things that go into building an annuity. It's never just a one size fits all. There's a company in town here that they sold out several years ago, and we seem to get a lot of their clients because they come in and ask, I don't know how this works, and I want you to take a look at it and see if you can help me. And basically, most of the time for us, it's just education. It's just really showing them how it works, what their goals, has it changed, what their needs are, and just taking a look into what is their plan. So going back, I'm getting off pace here a little bit. We have an immediate, we have a fixed, and we have a variable. The fourth type of annuity, and the one that we're going to use most often, is going to be a fixed index annuity. A fixed index annuity it's a more conservative investment that it has a fixed floor that you cannot lose value if you take a market downturn. So you probably see those commercials that talk about, I can't remember the name, but if it has a zero floor that you can never lose value due to market downturn. Those are true. That is a true thing. And basically in the growth of the market, you're sharing in the profit of the company. So what those companies, they do, they put caps, they put spreads, they put participation rates. So for example, some of our participation rates, 80, 90% right now, meaning if that market were to get 10 and you're at a 90% participation, you're going to get 9. You're not going to get that full amount, but you're sharing in the growth. But anytime there's a market downturn, you're not losing any value. Why is that important? It's important to an investor that as they're in retirement, that value cannot go down. What they have or the income they're receiving can never go back down. So if I have a client that's receiving $1,000 a month, and something else that these companies have gotten smart with is inflation protection. Almost all my companies now on the annuities, they offer inflation protection. And what that means is, let's say that I started $1,000 a month, and then I have some interest, I have some market growth, and I get a pay raise. And so the next year I'm at $1,200 a month. Well, anytime there's a positive growth in the market, my clients get a pay raise. If the market goes down, it loses 20, 30, 40%, we stay the same. So if I started at $1,000 a month, I grow to $1,500 a month, there's a market downturn, my client is still at $1,500 a month. Why is that important? For a lot of our clients that are looking to supplement their income, and that helps them with their lifestyle, we only want to either stay the same or grow. We never want them to have to adjust their lifestyle. The second part of the fixed index annuity is the lifetime payout, and it can be worked a couple different ways. It can be worked that if you're married, so let's take me and my wife, for example. So if I have an annuity in my name, it's my IRA, it's my 401k. If something happens to me, my wife would still receive that income. The income stops when that last spouse passes away, and then whatever's left in the account, it goes to the beneficiaries. None of our companies that we use keep a dime. If there's $10 in the account, that goes to the beneficiaries, and it passes probate free. So when it comes to annuities, there is a lot of good and bads, but the number one part of it is education side, to know how that really works, how that's really built, and what is that going to do for me. That's why we have to be so careful when we're placing annuities. Is it going to satisfy the needs of the clients? Something else you have to be aware of when using annuities is the surrender charges. There are surrender charges on annuities, and it's different for every company. Some of those ones that we're seeing from years ago, those products had 16 to 20 year surrender periods. So think about that. If you invested that money 20 years later, 19 years later, you still might have a surrender charge on there. That's hard for me to fathom, because any of our products now, they're going to have about a 7 to 10 year surrender charge. And so it's real important that when we're recommending an annuity, it has to be the right fit for that person. There has to be a justification of why we recommend it. And so those are the 4 types of annuities: immediate, fixed, variable, and fixed index. And I just highly advise you not always to believe everything on the internet. Do your own research, talk to a professional about what might be the best annuity for you, because in some situations, an annuity is a really, really good vehicle. In other situations, it could hurt you. And so you just have to be real careful about that. But in saying this, it goes back into the holistic planning. It goes back into the NAIFA advocacy. It goes into the NAIFA consumer education. If I cannot educate one of my clients on something I might recommend and make sure they understand it, am I doing them the right service? And if I can't, then I'm not. And so it's real important for us that we're educating our clients, and our clients are able to go back and say, hey, this is where my money's at. This is what my money's doing. So just know that where you're investing your money, you have to know where it's at, what it's doing, who's holding it. And that's what this week has just been real eye-opening with NAIFA. It's one of those deals that you go there once or twice a year, and it recharges your batteries. It opens your eyes again. It gets you excited again. And I'll always say it, I have the best job in the world. I love what I do. But anytime you can get those batteries charged from other advisors, from professionals, it's always an opportunity. So again, just touching back on the insurance, the life insurance. If you're thinking about it, if you have a family, I just advise you to talk to a professional. Think about the surviving spouse. Think about your children. Think about your future. You really want to take care of your surviving spouse and the ones that love you. So, ladies and gentlemen, thank y'all so much for joining us today. This has been a fun radio show. There's a lot of going on right now, and I appreciate you taking your time. This is Caprock Wealth and Wellness. Our phone number here at the office is 806-749-7870. If you have any questions, please reach out to us. Good luck today, Tech. Let's go get the win. I hope everybody has a great Saturday, and I look forward to talking to y'all next week. Thank you very much.